doesn't matter what the government does or doesn't do. You cannot force the private sector to act. And the more the public spends, the less the private sector spends.
Why do you think the BLS announced? I mean, they put rent was one of the biggest factors that they saw as the driver behind the increase in inflation. Where do you think they're getting their numbers from?
We've been a world of zombies kept alive by virtue of zero interest rate policy for far too long. It's going to be a double whammy because you're going to see mortgage rates go up at the same time that inventory is going up. It's just a toxic combination.
Hey everybody, super excited to be here today with Danielle DiMartino, a super fan of Truflation, very early on, an early spotter of what we were working on. And yeah, it's great to have you back. And actually we had you on Spaces before, and now we're sort of doing more on podcasts, videos, and great to have you. Thank you for taking the time out.
It's been a long time since Singapore. Good to see you.
Yeah. It was great. For those of you that don't know, we were in Singapore. It was boiling hot. It was in the middle of the summer. You couldn't move outdoors with dripping in sweat, but it was great seeing you there. And we had an amazing meal. We got the report today. I mean, I guess we can't not talk about it, right? We got an inflation report coming in higher than the market expected, higher than we expected. Change in methodology. Is why a lot of people put it down to a higher than expected number. 3.0 was the number. It was 2.9 last month in December. So January's up 3.0. And I'm sure you have a lot of opinions around this. And excited to hear your thoughts. You did not expect it. It was not unexpected for you. Let's put it like that.
Especially the headline print was not unexpected. No. I mean, you got 30% of the food portion alone was impacted by this massive 15.2% year over year increase in eggs, in egg prices. I mean, it's all over the news. But there were a lot of other idiosyncrasies that you could have easily anticipated just because of what's been going on around the country. Yeah. And again, they're huge aberrations. They change the seasonals again. But a lot of things, as we see bearing out in Truflation, that caused the number to pop today at the headline and even at the core, a lot of these things have already been unwound. Yeah. And I think that's where we have to be very mindful of just, in the event whoever's watching is not familiar with this, Truflation data since January 2012 has a 0.97%, almost perfect correlation with headline CPI. It tells you where the CPI is headed. It tells you where it's going. And Truflation, true to what happened a year ago, we also saw massive base effects in Truflation. And so we saw a huge run up, and that has since been unwound. As we speak today, Truflation printed at 2.07%. When the Fed met on January the 31st, it was 2.7%. And so we've seen a huge unwind in a very short period of time. Before we started filming, we were talking about how very short the year has been, 2025. We're filming this on February the 12th, and yet we've seen a major ramp up in the bankruptcy cycle. And we've seen about 2,500 store closure announcements in the period of not even 6 weeks into the year.
Do you think that's largely due to the cost of capital that's making it really difficult to keep the stores open and on foot traffic, right? I mean, is there no more foot traffic, people working from home more, or what do you put that down to?
There is something to be said for foot traffic, but there's also something to be said for fundamentals. Yeah. So if you look at specifically at clothing prices, and they have done a full round trip. Yeah. If you look at recreation and culture, they have also come right back down. And these are reflections of job losses. And there is a certain amount of of foot traffic. There are a lot of names in retail that are going away because they're past their time. People aren't going to GameStop anymore. That's not a mystery. So much is done online and with streaming. It's just like Blockbuster from a generation ago. That was kind of an expected decline, if you will. But a lot of the stores that are closing also reflect the fundamentals of increased layoffs, of increased bankruptcies, and of depleted income. And that's something I think that has to be recognized. The Fed, even though there's expectations for way fewer job rate cuts in 2025, the Fed right now is very attentive to the massive slowdown that we've seen in wage inflation and what the implications are going to be, especially for what we were just talking about, discretionary spending.
Yeah, I mean, I think Powell came out and said that he will not increase their balance sheet or put money into the market until he's dropped interest rates down to zero. The labor market, obviously, we had the numbers on Friday. I think there were fewer jobs in the market than the BLS. At least the forecast was greater than the actual numbers that the BLS reported. So it definitely, we're definitely not around the block yet. I mean, there's definitely a lot of work in front of us.
There is. And I think we have to be, again, I'm going to go back to wage inflation, not to harp on the subject, but wage inflation's the most, it's the most powerful form of inflation that exists. And when you look at a work week fall to 34.1 hours, for workers, for the worker bees of the economy, it fell to 33.5 hours. You've got to go back to 2008 to see these numbers. And, it's always hours before bodies. Companies were very burned in the aftermath of the pandemic. It was really difficult to get workers. They're pulling hours back as much as they can to not have to fire people. But it's still nonetheless a precursor of what's to come if demand does not return. And again, what we're seeing in a lot of these inflation metrics, clothing prices coming down hard, hotel prices, as we see in Truflation, have done a full reversal. We were just talking about, I was in Los Angeles during the worst days of the fires, and I'm typically there. This is my 6th year in a row of doing the double line roundtable, but every other January that I've been visiting at the very beginning of the year, it's quiet as crickets in the hotels until this year. And the hotel was just wall-to-wall humanity, completely sold out. It was the same case as people fled their homes. And, in a city that's as big as Los Angeles, you can move the inflation needle for hotels. And that's exactly what we saw. And we've seen a surge in rents, specifically on the West Coast, specifically in Los Angeles. But in the rest of the country, we're seeing rents come off pretty hard, including in Truflation.
Yeah. And so why do you think the BLS announced? I mean, they put rent was one of the biggest factors that they saw as the driver behind the increase in inflation. Where do you think they're getting their numbers from?
Well, their numbers are extremely lagged, first of all. But even so, the prints that we're seeing are some of the lowest that we've seen in years. Compared to what we were seeing a year ago or 2 years ago. And, if you look at the chart, despite the fact that rents and owner's equivalent rent came in a little bit hotter than what was expected. If you look at the Cleveland Fed, which is something we've been focused on and something that Chair Powell and Governor Christopher Waller have been focused on, if you look at the Cleveland Fed new tenant rent index, boy, that swung from a positive 1.6% year over year in 2024's third quarter to negative 2.6% year over year in the fourth quarter. That 4% swing is just incredibly large, and it's a pure reflection of supply and demand. There are way too many apartments coming online. We've seen it. The hotel REITs have just reported And depending on where they're located, especially in the Sun Belt states, which are just seeing inventory increase so rapidly, one of them saw new rents decline by 8% year over year with big exposure to the Sun Belt. And again, that's just a reflection of supply. I was just in Austin a few days ago, Austin, Texas.
Yeah.
Rents are down 16% in Austin. This is kind of fresh Redfin data. But again, this is purely the law of supply and demand. We're seeing housing inventories in many major markets across the country hit the highest level since 2019. My good friend Ivy Zellman, she closely tracks the states of Arizona, Nevada, and California, and what she's seeing with foot traffic, what she's seeing with absorptions on the new home side. Today was the first day that her weekly report on Western new home sales was quote unquote concerning, because seasonally speaking, they're seeing much lower sales than you would see otherwise. And meanwhile, back at the ranch, you've got the bond vigilantes, they're trading their book.
Yeah.
And with what's happening with mortgage rates, despite the fact that we're seeing inventories move up, it's going to be a double whammy, because you're going to see mortgage rates go up at the same time that inventory is going up. It's just a toxic combination.
Yeah, I mean, Austin, there's always been a lot of construction in Austin. They've always tried to achieve a lot of supply in the market so that rent wouldn't become, absorbent, and people could digest and find venues to stay. But I mean, I think, we have a new president. I mean, Trump's now in. Mm-hmm. We've got DOGE having its impact. We've got the first whiff of what tariffs are going to look like. And this all within, sort of a month, right? Or not quite a month yet, right? And so it's a significant impact. How do you see that? And obviously a large portion of the campaign was around DOGE. We want to create an efficient government, which we all want, and I think we're all happy about. What about the other aspects, sort of around tariffs? How do you think that the campaign leading up to this, will tariffs impact that? What's your thoughts on that?
So, it's interesting because we've just come off of 2 days of congressional testimony by Fed Chair Powell.
Yep.
And, every senator, every Congress, just about every one of them was pressing him. What are the effects of these tariffs going to be? Yep. And, he was constantly pushing back at the microphone saying, we don't know. Yep. We can't say. What we do know was that the CPI from 2018 to 2019 fell. And that's our closest experience with tariffs, because the effect of the tariff was to slow growth. And that overwhelmed the inflationary impulse. And we saw that come out with the Federal Open Market Committee's release on the same day the Fed met of the 2019 meeting transcripts. And I think that was a warning to say, be careful with tariffs and don't focus so much on the potential inflationary impact, but on the potential to slow growth. We live in a world where global trade is a huge phenomenon. Yep. For the full year of 2019, global trade contracted. And that depressed growth.
Yep.
And we've never seen the United States not fall into recession when we've had global trade contract for the full year. We can't pretend that the United States is on an island. And we are seeing continued deflationary impulses coming out of China.
Yep.
So look at what's happening with Germany. Yep. Their automakers are on their knees, and China's been dumping steel onto the German market, which has a very depressionary impact. And then you asked me about Elon Musk and DOGE, and 70% of payrolls created in January came basically from the public sector and healthcare and things that are fed by the public sector. For heaven's sake, what's going to happen when these people aren't working? Yeah. And you cannot deny the effect that deficit spending has had on wage inflation in recent years, when all of these jobs being created were coming out of the public sector. what the implication is if that goes away. If, one of my burning questions for clients is what happens if Musk succeeds and truly makes the government more efficient by cutting wasteful spending, but focus on that last word by cutting spending. It's what the country needs.
Yeah.
It is, undoubtedly welcome to cut out the waste. By
Yeah,
the
I mean,
same,
there's a $2 trillion deficit, right? I mean, they have to cut $2 trillion somewhere,
it's
and
massive.
it's trillions. I mean, how do we? I mean, most people can't even fathom billions, but trillions. I mean, that's a whole nother level, right? I mean, it's just really, and you got to start somewhere, I guess, right? I mean,
You do,
and
and I don't think anybody disagrees with
yeah,
the damage done to U.S. school children by keeping them out of schools for as long as they did in certain cities where the teachers' unions were in full control. I mean, there are a lot of Americans out there who would suggest that the Democrats lost the election precisely because they ignored a lot of the parents who were saying, look what you're doing to my kids. And so there are a lot of people out there who would advocate for blowing up the Department of Education. But the end result is deflationary if and when you do that. It is what it is.
So that said, I mean, on a global level, the US economy is still the strongest economy. It's the most attractive economy. And I think it's still continuing to attract a lot of investment and outside money or, yeah, purchases of T-bills, right? I mean, we're seeing the Dixie and the dollar being extremely high. It's staying, I think 108, 110 or something. So ultimately, does that mean that it's still the safe haven? The world still looks to the US and, can get away with a lot of tariffs. And at the same time, they may debase their currency in order to map it against the US dollar so that the tariffs can be absorbed by that debasement that will happen in those countries and markets.
I mean, all of this is highly. We could expect the scenario to play out exactly as you describe it. I saw a forecast a few days ago that suggested that the yuan would be at 8 by the end of 2025. I mean,
wow,
about that. Not my forecast, but a large currency strategist was making this prediction just because something has to act as a shock absorber if these tariffs are rolled out as they're being threatened. And of course there'll be retaliatory. Canada was just talking about potentially aluminum and retaliatory tariffs there. Anything is possible, but again, what's going to slow as a result is growth initially.
Yeah, I mean, that's one thing that, we're on the growth side. I mean, on the one hand, we look at a lot of technology that's breaking through. We're seeing blockchain technologies, we're seeing AI technologies, we're seeing biotech, all of these new categories, robotics, that are really going to accelerate growth, increase productivity, but they take time to find their foothold. They take time to get adoption and I think we see time adoption a lot quicker on the short time frame, and our expectations are far higher. But on the long time frame, sure, they're going to adopt and have a significant impact. What do you think the government's going to be doing in order to accelerate that or stimulate the adoption of these new technologies?
So I think that
what can they do?
that's the thing, and that if there's nothing else that we can take away from the last few years, it's that it doesn't matter what the government does or doesn't do. You cannot force the private sector to act, and the more the public spends, the less the private sector spends. And we're learning this the hard way in an environment where long-term rates are still prohibitively high and causing mass insolvencies, including now bleeding into the U.S. household sector. We're seeing bankruptcies rise. So yes, adoption of AI is going to be a huge game changer. And you could see many wonderful results of this, but you have to get past the valley first.
Yeah.
And you have to get past that chapter in the book where in order to get to the promised land, you've got to get through the valley. And we are seeing companies use technological advancements as reason to shore up their margins, to protect their bottom lines, to cut costs, to right size their workforce, do whatever they can to. I mean, they are shareholder driven entities after all, and that is actually what they're supposed to do.
Yeah.
But again, there's a short term pain involved in all of this in order to get to eventually a place where we're at a much higher level of productivity.
So we need to go through some pain before we can benefit from the rewards for that pain.
And I think that the promise of AI is extraordinary. If the silver lining of the pandemic is definitely that we can bring the best and brightest minds in education, in theory, to every child in America, and deliver education that lifts all children across the country to where you actually end up benefiting in the economy in the long run because you've got a more educated workforce. I always say, we worry about the bricks, but what do the bricks have in common, or at least quite a few of them, and that is that they educate their young. Yeah.
And a lot of them at least especially in Russia or in China, a lot of them around STEM. In India, STEM is still an important category.
Just name the three. Yes.
Yeah, exactly. And I think one of the things, though, if you look at what DOGE is trying to do in terms of, and I think it was on the cover of an Economist magazine or something, all the red tape that's been pulled away. We saw it happen in Argentina. There's still pain. There's still pain in Argentina, though. I don't think they're beyond that pain, but they've cleaned up their balance sheet. The financials look a bit better. They seem to be on a much healthier track because they ripped away that red tape. Ripping away red tape, will that... And then talking about building out infrastructure, and there's a lot of investment that needs to take place.
Yes.
Energy, grid updates, compute resources, these data centers that everybody's talking about. How does that accelerate, and does that create a new set of jobs that ultimately people can they need new talent, and people can readjust and support that new category of where demand is?
So the United States is trillions and trillions of dollars and decades behind where it needs to be just to catch up with emerging economies' infrastructure.
Yeah.
Look, we have to look to the Eisenhower era and what happened in terms of productivity gains when there were solid public-private partnerships that worked together to create jobs and to increase productivity that put the country on a stronger footing then. We have to look back to successful historical precedents in terms of what can be unleashed. Now, I will push back a little bit when it comes to data centers, just because the United States has about 5,600 of them.
Most data centers in the world.
Has about 500. Germany has about 500. There's this rumor out there that there's a new technology that suggests that data centers need approximately an 86% smaller footprint. So there is the odd chance that we've built too many data centers. But boy, hit the infrastructure button all day long. Seriously, because that holds tremendous promise. I'm sitting here in Dallas, Texas, where it's going to be 27 degrees Fahrenheit tonight. And we wonder whether the grid's going to hold.
Hold it, yeah.
And so there's huge opportunity there, and untapped opportunity, and the chance to put so many Americans to work.
And so where do you think those new jobs are going to be coming from? One thing we did learn over the last sort of decades is the fact that today the jobs that we have, or we never could have thought of yesterday, and unlikely we're thinking of tomorrow, what those new types of jobs are going to be in those new environments. Where do you see sort of over the next 1, 2, 3 years, where will a lot of investment go? What sort of infrastructure is going to be upgraded? And what sort of talent will people need to be reskilling themselves in order to participate in that?
So, I'll leave to the Corps of Engineers how the infrastructure build out is going to happen. I'm going to leave it in their capable hands
Yeah.
and not put my hard hat on as much as I love it. But I will say that there is insane amounts of potential in healthcare.
Yeah.
Look, in Europe where you are, there have been CT scans of the human heart that have occurred for a good decade in Europe. That technology is coming to the United States in beta form, but in a whole new and better way.
Yeah.
The printouts from these heart scans used to require huge amounts of effort and time to interpret and to map. You can put them in AI and get the readout in 5 minutes. And so, but if you apply that across a wide spectrum of the future of healthcare, you could see all kinds of jobs being created in this realm. And who doesn't want to talk about, extending,
Life
longevity? We all want the fountain of youth and we all want to live forever. But those are some of the things that can be harnessed and set free. And look at us now. We're saying to ourselves, we don't have enough doctors in the country. We didn't train enough doctors. But there will be huge promise. Demographics is destiny. And, the world is aging. But on the other hand, what's happening in technology, can be a total game changer when it comes to the promise of AI and the promise of being able to make healthcare that much more efficient. And it's a huge potential growth area for the United States where healthcare is woefully inefficient.
Yeah, I mean, personalized medicines, longevity, new practices that have been documented and studied and papers and drafted and practiced outside the US on US citizens because we can't actually service in the US. So we got to go to Mexico and that's where we can go get our treatment. So it's like all of a sudden, will that come back to the US and then ultimately create a whole new set of jobs, rehabilitation, physiotherapy, and how that will evolve, right? And what sort of...
You mentioned red tape. I mean, for heaven's sake, the FDA is the home of red tape, or we would have long since have had a lot of these healthcare technologies come to the United States. I mean, for heaven's sake, that's very low-hanging fruit. And it benefits the government, right? I mean, if you're bringing new technology and you're not spending as much on healthcare, and that's very taxpayer friendly.
Yeah. So, do you think bringing the $2 trillion deficit down is a realistic goal in the next 2 years? Is that a time frame that's realistic? Are we looking maybe more at 4 years? You think that's achievable?
Well, I mean, there's always accounting to help you out, right?
Yeah.
So there's this idea that we can revalue the gold on the nation's balance sheet, sitting there at $42 for something a lot closer to $3,000, and that would give you a one-time accounting benefit of about $800-900 billion. So. It would certainly help the nation's finances look a little bit healthier. But no, when it comes to the nuts and bolts, I think that there is tremendous opportunity. I was looking at some numbers last week of simply the amount of fraud that had come out of the darn near $15 trillion of post-pandemic spending. And some estimates suggested that there was $2 trillion of fraud attached to this. So, I mean, talk about, upgrading our payment system, upgrading the ability to protect the nation's finances from fraud going forward. And yes, you can start to really add up your hundreds of billions of dollars in a heartbeat. So I for somebody who, people always accuse of carrying a gray cloud over my head, I think that there is just a huge chance to really make some tangible gains in efficiency but that also end up creating jobs going forward, which is, it's a win-win.
Yeah. Yeah, I mean, I think, there's a lot of opportunity around accounting. I think you picked up on it. The gold is valued at $42, but actually it's up at 2,900 or something. And what is your thought? Why gold is now at an all-time high? Talking about gold, is that because people are worried about inflation? There is so much turmoil in the world right now that people are just looking for a bit of a safe haven, given all the volatility that's taking place, or are there other thoughts around that?
So, I do think it's the latter of the two. I think that there is a tremendous amount of geopolitical uncertainty. And any Wall Street veteran will say, well, it's never affected the markets. It's never going to affect them. Well, then why are countries piling into gold hand over fist? Why does, Germany have its first military in, I don't know, sometime. But there is indeed, even if China was just to become kind of on par with its government's holdings of gold compared to other developed nations, I mean, that alone can lift purchases quite a bit. So um, as optimistic as I am, I do see gold, and the reason that gold has increased so much in price recently, as a reflection of the need for a true safe haven.
Yeah.
And I safe. So we don't know what's going to happen with Taiwan. We don't know what's going to happen on the border of China and Russia. There are so many different border of China and India. There are many different possibilities. We don't know what tomorrow holds, but we do know that the world is in a defensive posture right now, just in case.
Yeah, I mean, even I think there was just a tweet that went out before we got on the call that Trump, he posted that he just got off the phone with Putin and they're getting to the table. They're going to negotiate now. Very productive call. I think that's a good sign. So let's hope that they can pull that off and create a bit more stability. And I mean, ultimately, also Taiwan is an extremely strategically important island. All the chips there are produced there. TSMC has their headquarters there, although they do a lot of manufacturing in China as well. But actually, they managed to get it out of Taiwan. And so there is a very tight trade relationship, maybe not directly, but through proxies, right?
There is. And, even when you step back and examine, what's the end game with Panama? What's the end game with Greenland? What's the end game with potentially imposing tariffs on Mexico? A lot of these are indirect ways to try and curtail China's the growth in their power base in recent years. And so, but we have to be mindful of the fact that it's not a one-way negotiation, and that there are potential consequences, that history teaches us that it's currency war, trade war, cold war, hot war. It's just the way that the world has worked. And so, again, we have to be mindful that if we take action, whether direct or indirect, to curtail China's rise, there could indeed be consequences. And when you're talking about Taiwan Semiconductor, that's about as consequential as it gets, because it's all about following the money.
Yeah. Yeah, no. I mean, we all want to, I mean, I don't know if this is the right way to say it, but ultimately we all want the Western sort of new frontier, the freedom and sort of the desire to disrupt and be able to change up economies and institutions and businesses, create new businesses. We want that to stay strong, that Western culture, the American way, right? The new frontier. Versus having a centralized 5-year plan. And if you're a successful entrepreneur, having disrupted too many industries, you have to shut your business down, right? And so those are things that I think we don't want to see take place. And the way I look,
and I should be, I should be clear in saying that there is, there's a positive, there's a positivity to the bankruptcies that we're seeing today.
Yeah.
And it's not to
What is
be
that?
sensitive to people losing their jobs and companies going out of business and what have you. But, we've been a world of zombies kept alive by virtue of zero interest rate policy for far too long. And if there's a benefit to the Fed being higher for longer than it would otherwise be, it is that there are inefficient operators that are not surviving, but by definition, they make room for new entrants and for innovation and for entrepreneurs and for job creators instead of job destructors. So, there is something to be said for the cleansing effect of making way, making room for the next generation of companies to come about.
Yeah, because I mean, we saw that in the, when I can't remember back in, was it late 70s maybe, or when all the bases in California, they shut down the bases, right? So a lot of people had to find new jobs, and they moved into semiconductor industry, right? And so that grew a whole new economy. So that necessity to find new opportunities and create something different converted, orchards into silicon factories, right? So it's like, it's just, yeah. So that change does bring about good things.
Cliches aren't born. Cliches are formed, if you will. And, necessity is the mother of innovation is one of them.
Yeah.
And we have to have that spirit, and we have to keep that spirit alive.
Yeah. And so what's your view, sort of, keeping, sort of the trade restrictions on China, sort of some argue that was a result of the birth, of DeepSeek. I don't think you can argue that was the birth of it, but it might have been part of the, they have a necessity to keep up. They have a need to be able to develop processors that can help them process the kind of LLMs that are, and the inference needed to process LLM, the AI engines that are going to feed the decisions in order to compete in this new environment. And necessity forced them to do that. Would you agree with that? Or
if you really think through where we are today, we've continued on the currency war, trade war, Cold War spectrum.
No.
This is not necessarily Trump trade war 2.0.
Yeah.
This is United States China Cold War.
Yeah.
Because it is warfare that we're witnessing.
Yeah. Wow. Yeah, you can see it in some of the posturing, in some of the the sort of backdoor sort of conversations. It may not be right up at front. Trump may be posturing a lot, but in essence, he's just throwing an anchor out there and trying to anchor people way out there, and then sort of try and reach an acceptable win in the negotiations. But behind the scenes, you're actually seeing, what you're saying. Yeah, maybe this is a Cold War. I haven't thought of that, actually.
Well, if you think about the conversations that may be occurring between the United States and Germany right now.
Yeah.
Is Germany having second thoughts about, hitching their economic wagon to China now that it really has come back, really, really to bite them? Electric vehicles are made in China, and again, as I mentioned earlier, China's dumping steel into the German market when the German industrial juggernaut is on its knees. So, if you're a shrewd U.S. politician, you're having the discussions with our allies and saying, are you sure you want to be aligned with them, or maybe you want to be aligned with us?
Yes.
But that's how Cold Wars operate.
Yeah. Yeah. No, it's like, and I think, you saw some of the tonality. There was just a big AI conference in Paris. Macron was inviting all the sort of leaders of different nations, and JD Vance was up there and he was talking. I mean, his speech was, very eloquent, but very concise and very, very target. You're either with us. We are leading. You want to be with us in the lead, and then we always love people to work alongside us, right? Sort of, it was brilliant. But yeah, definitely posture was there, right? And the knife.
I mean, it's like JD Vance meets Michael Corleone. I mean,
Yeah. Yeah, interesting. Yeah, there was. I
and by
didn't.
the way, this is occurring in Paris when France is in its first recession. And how long? So again, backdrops matter.
Yeah.
They really, really do. And I think that the world is dismissing to its detriment what is not just happening in Germany, but what's happening in Europe's second largest economy as well.
And you look at those economies, I don't understand. I mean, Germany's really struggling with it. Oh, equally, they've got their budget deficit. They cannot spend beyond a certain amount of GDP. So they've got the same issue with trying to get a budget approved. They are in significant debt. Their economy's in a rapid decline. France is witnessing the same. I think ECB just issued some $2.5 trillion in bond purchases from governments across Europe, as well as private entities across Europe. So I don't know how Europe is going to turn its way around without sort of really cutting significant costs.
And these are even more difficult decisions to undertake in Europe than they are in the United States.
Yeah.
And even in the United States, we're quickly becoming kind of mired in this legal quagmire of one federal judge and this injunction and that injunction. And, one step is made and two steps are taken
backwards.
So I can only imagine how much more difficult the task would be in Europe, given its institutions and its structure and the fact that it's not a sovereign.
Yeah.
When you say Europe, it's many different countries.
And everyone has their own opinion. They have offices there. They have own standards. They have their own formats. We tried to do Truflation in Europe. And I remember we started off with the UK because the UK was a slightly English language. They're very sophisticated. They had a lot of the infrastructure was open access, and the technology adopted was very much akin to what you experience in the US. But the rest of Europe, we went to meet the EU and they wanted us to immediately, for like $100,000 grant or something, they wanted us to roll out in 27 countries simultaneously. We had to have 17 different languages. I mean, it was just not economically viable if you don't sort of put any kind of commitment behind it. And then, so in the end, you end up going to each of the countries and you start with the biggest country first, Germany. Then you go to France and then you go, so it's definitely a challenge. And that was, to me, it was just, it baffled me how they expected you to have this right from the get-go. They wanted you to have this huge organization with hundreds of people, all being able to support each of the countries. It was a funny experience.
Well, Brussels exists for a reason. So.
Yeah. And then the other thing, though, if you come back to, the growth element, right? We need money supply. Money supply has been, in the US, has been sort of slowly coming down. But then how do you see that? I mean, I don't see the money prints are going burr anytime soon. Is it where, how are we going to stimulate the economy without any more liquidity in the market?
Well, that's a really good question, because the banks, even if we were able to do that, you'd have to make the banks lend.
Yep.
And, there's been, since Silicon Valley Bank failed, almost 2 years ago now, there's been a whole lot of nothing going on in the U.S. banking sector. Now, the biggest banks are lending to non-depository financial institutions. And that's just a great big way of saying that the biggest banks on the conventional side are lending to private entities and lending into the shadows and lending into private equity, private credit, creating liquidity for mortgages, excuse me, actually for mortgages as well, but broker dealers to extend their own quiet form of margin liquidity and what have you.
Oh.
And that's up about 20% year over year. It's real. But if you look at lending into just the private sector, traditional forms of loans, since Silicon Valley Bank failed, it's just kind of frozen. And that's partly because, the regulators, the banking regulators in the United States, it's very difficult to broker a marriage.
Yeah.
Banks are sitting on all these losses on their securities portfolios, their treasuries, their mortgage-backed securities. And as Chair Powell said today, commercial real estate is going to be with us and highly problematic for a very long time. And in addition to trying to broker a merger and acquisition and get the banking system back to being vibrant and robust again, you're not just buying a bank's losses on their securities holdings, you're buying their loan book. And it's really hard to say what that's worth.
Yeah.
With all these commercial real estate losses. So even if liquidity was to be created by the Fed, would you be able to force the banks to lend? And the answer is, I don't know. I think it would still be a huge challenge. The next best step could be to create something like a long-term refinancing obligation where you give the banks a lifeline to have a few years of really inexpensive debt in order to try and facilitate mergers and thereby eventually create more liquidity in the system, a healthier banking system overall. But there are a lot of challenges when it comes to, not just interest rate policy, but liquidity. And I don't, May 2026 may seem like it's going to be tomorrow, but when Jay Powell's term is up, but with the new administration only a few weeks in, every month may feel like a dog year.
Yeah, I mean, my view partially is also the fact that the banking system is in a way it's broken, right? I mean, the loans aren't getting out to businesses. The people that need it are not getting it. And there is a loss in understanding of how businesses operate or specific industry verticals need capital, understanding that and trying to, I get it, and we're willing to take a bit of a risk associated with that capital, but it's coming with interest at such and such or a duration of such and such a time. So that flexibility seems to have gone. And you talk to most banks and you really sort of look into their operations, 60 cents on the dollar they make or 70 cents on the dollar they make goes into compliance, registration, legislation, accounting, etc. So it's really, do we need a fresh banking system? And Silicon Valley Bank, as you mentioned earlier, was trying to innovate in that category. We understand tech companies and we're trying to innovate in here. And we saw in the hearings that there was also, that mention was brought up as well. Was that purposefully done or was that sort of, yeah?
It remains to be seen because at some point you have to have some cushion. You have to have some capital. So there's always what we need really is a middle ground for the banking system. We don't need razor thin capital cushions, but we don't need them to be prohibitively high either. But again, we've seen a real sclerosis in the banking system, and it's that much worse in other parts of the world.
Yeah, but I mean, yeah, it's definitely, it's way worse in other parts of the world. I think other parts of the world have a huge task in front of them. Technology ultimately has outperformed in any sort of economic situation. Look at the tech companies, the Mag 7s. They're all, I mean, from a P&L perspective, from a margin perspective, they're all earnings per share perspective. They're just all outperforming and their growth trajectories reflect that. Any other industry is going to be struggling.
That's true. And you now have kind of the deep seek specter and investors starting to question, on top of all of this, whether or not even the Mag 7 has wisely spent its money, whether or not, if AI is going to be much more efficient than what we had assumed it was going to be. Has there been overinvestment? Has there been too much money spent? And so just the fact that the questions are being asked right now, there was a big article out a few weekends ago, has there been an overinvestment in data centers? Is that commercial real estate going to be potentially impaired? Is this fiber optics 2.0? But for the fact that the questions are being asked, it introduces a risk into the system. It introduces a risk into valuations.
So you meet a lot of investors, and you're talking to a number of different fund managers, etc. What are they looking to invest in? Where do they see some of the hope in the next sort of 6, 12, 18 months? What are their views, and where are they deploying money right now? Yeah, based on what you're hearing or feeling.
So, the word that I'm hearing more and more, the words I'm hearing more and more are cash flow.
Interesting.
And so I think, I think the ability to maintain a dividend, I think the ability to service debt, strength of the balance sheet, continuity and safety of cash flow, these are some of the focuses, and that's what you get, right? Yeah. When you're at this stage in the markets, when you have millions of Americans retiring, and so the guarantee of passive inflows is not necessarily maybe what it was a few years ago, and you don't have hiring in the same way that you did before either. So you don't have fresh inflows, fresh 401ks being opened in order to offset and displace the people who were leaving the workforce, because the median age of a baby boomer is 70.
Wow. Yeah, I think that's liquidity, right? Or cash flow. There's got to be a turnover, velocity. Interesting. Which is, why the US dollar, number one, is just king, because it's just it's so deep, those pools. Forget
that the currency markets are multiples of the size of other asset markets.
Yeah, no, definitely. Wow. Yeah, we've got a lot in front of us. Super exciting. Despite, I think, all of the challenges we have in front of us and the changes, and it's not easy, right? I mean, there's so many different fabrics, there's so many strands, and they all interplay, right? There's a tingle over there that has a effect and a wave on the other side of the planet, and so navigating that is challenging, but let's go
back to where we started just for a second, and that's Truflation. And if you consider, again, the fact that it takes 16 to 24 weeks to hatch a whole new nation's worth of chickens, which is great. But when you consider that, and you consider that Truflation tells us that inflation is not as problematic as what we're seeing in the headlines, I mean, that's actually the best news that you could possibly have right now, because the greatest source of anxiety for U.S. households is inflation.
Yep.
And if we know that that's going to be coming off the high boil, if we know that all these idiosyncrasies and replacing used cars because of natural disasters and people flocking to hotels in Los Angeles because of the fires, if we know that a lot of these price pressures are coming off, then it's going to be good for the society. It's going to be good for all the anxieties that so many households are harboring right now, that inflation might become too sticky. Truflation's telling us that there's relief.
Yep.
And real-time relief, and that's coming down the pipeline. And I think we have to look to the optimistic outlook, to the optimistic side of the outlook.
No, definitely. I mean, we done some correlations going back till, I think, as far as back as we can, and we've identified that basically Truflation's giving us a 45-day lead time on what the BLS is at, and so that would mean that we should see some more positive impact in the next numbers in February,
Yep.
given that we saw a big drop in January, end of January. So it's like, yeah. But yeah, thank you
Okay.
so much, Danielle. Amazing. Always fun talking to you, and really enjoy it. And yeah, thank you for taking some time. How can people follow? Where should they go?
Yes, please.
Yeah.
Yep. Thank you for asking. Follow me on Twitter at DiMartino Booth. I'm always happy to have the company, and I'm happy to edify as much as I can. And then come to DiMartinoBooth.substack.com. We publish 8 times a week. We put a daily out as well. Love to have you join the QI research community.
No, definitely. It's and the good newsletters that you put out exactly on Substack, definitely sign up for those. We've seen an amazing uptick in respondents in the last, since Trump, actually since January. It's really just taken off at a level that people just don't believe the numbers anymore, and so they're looking for that new source of truth. So you are one of those voices, and you identified this new source of Truflation. So thank you so much, and have a great rest of your day, and look forward to the next time.
Likewise. Thank you for having me.